The truth is, an economics degree is one of the most versatile in the job market. Economists aren't limited to finance. They can work in data analysis, consulting, public policy, environmental planning, market intelligence, education, international trade, and even in tech, including programming and artificial intelligence, especially in startups and fintechs. Society often expects economists to understand all of these areas. That's a lot of responsibility, isn't it? Anywhere decisions need to be made based on data, scenarios, and economic impact, there's room for an economist. So when we think of banks, it's no surprise we see them as natural homes for economists, offering not just strong salaries, but also benefits, career growth, and retirement plans. But what exactly does an economist do in a bank? And how do you land one of those jobs? Let's break it down. In practice, economists in banks work on a wide range of tasks, from economic forecasting to credit analysis. They help shape internal policies, study markets and competition, build macroeconomic scenarios, support investment strategies, and prepare reports for stakeholders. They're not just working with spreadsheets, they're strategists, analysts, decision makers. The most valuable skills? Quantitative analysis, scenario modeling, and statistics, but also communication and commercial awareness. Never forget, a banker is also a salesperson. Offering banking products is part of the job. So how do you get into the banking sector? Start with a solid education. A bachelor's in economics is essential, but alone, it's not enough. Specializing through a master's or postgraduate program and getting the right certifications is key. In Brazil, for example, certifications like CPA 10, CPA 20, CEA, CFP, and CGA are often required, each unlocking different levels of responsibility and access within the financial market. And advanced English? It's no longer optional. Most banks work with international partners, and economists are expected to read, write, and communicate fluently in English. Working in a bank has real advantages: higher than average salaries, bonuses and profit sharing, strong benefits packages, structured career paths, ongoing training and certifications, deep technical and analytical development, prestige and career visibility, high-level professional networking, exclusive access to financial products, job stability, especially in public banks, internal mobility between departments, exposure to international markets and opportunities. If you're still in college, getting into the financial world early through internships is a smart move. It helps build experience, expand your network, and boost your confidence. Trainee programs are also a great path, designed for recent graduates and often leading to fast-track careers. Banks are selective. They assess not just your academic background, but also your personality, communication skills, and ability to work with numbers. In public institutions, entry is through competitive exams, like those for Brazil's central bank, BNDES, Banco do Brasil, or CVM, leading to roles with long-term security and solid benefits. Whether in public or private banks, the financial sector offers excellent careers for economists. And let's not forget the fintech boom. Tech-driven financial companies that are also hiring economists, especially those with skills in data, innovation, and tech. As someone who's been studying this field closely, here's what I've learned. Your resume matters, yes, but what really sets you apart is how you read the economy and turn that insight into real decisions. That's what banks are looking for. Whether it's in a major institution, a disruptive fintech, or a public agency, applied economics is becoming one of the most valuable tools in the financial world. If you prepare with consistency and long-term vision, you'll find not just opportunities, but the power to shape decisions that move billions.